Hey, it's Mack with PriceActionTradingSystem.com, and it's Tuesday. It's March 3rd. This will be our chart lesson for today. And a really good trading day. We had a nice downtrend. Early on, this was fairly obvious. The trend line was real obvious where the lower side may not have been, um, but it fits real well. Looks like there was a midline here, and if you go a measured move over, that's exactly where we bounced. Um, And really, you probably would have, I didn't show this one, but there's one leg down. So when we started down here, I would have looked for a measured leg, and you can see we went a couple of ticks further than that. Um, then we had a correction here, and once we started lower here, and it was obvious we were going lower, I would look for a measured move with this whole um, overnight or early morning move, and you can see if you measure that, we didn't quite make it, and we rallied pretty good. But we only missed it by a few ticks as well. So um, that's what I was looking for a measured move once it was obvious we were going lower. And obviously, you're also not going to look for a move lower until you get the break, and or you're not going to look for a reversal. So we got the reversal here, and then you had a couple of legs down to a new low. I would call that the first move, most likely. And then this was the second move, and you can see we went a little bit further than that. So, but I would have been more inclined to look for this one, something of that nature. Uh, Once you got to this point, you had to get a really good setup to go short. Um, if this wasn't such a good signal bar, I don't know if I would have gone short right there. But there's more than one reason. It's a two-legged move up. It is a second entry. It's a great signal bar. But you got this little channel working down, or this trend line, and that's your first break. So you're probably going to push back and try to test that low. And then you got a trap right there, a long trap. And there's actually some reasons to consider going long there. Um, and really even here as well. Although the only reason the reason I would like this one better than this one is you don't have a break of this trend line yet. You're better off to wait. But it's hard to resist when you get that far away from the EMA and you get a big bullish reversal bar. Uh, it's hard to pass up those kind of trades because it's the odds are very high that prices are coming back, but they don't always come back. I mean, every now and then. I mean, here's one where you've had a couple of good legs down and it's trying to come back, and it doesn't come back to the EMA. It just breaks lower. It's a nice long trap, basically. So um, you got to be careful with those, and that's the reason I don't have them marked. They're very aggressive, but if you understand price action, you might be interested in those because they are, they are high probability trades. So. But let's back out, talk about the trades for the day, and then we'll wrap it up. Again, there's a two-tiered channel working down. It was pretty obvious this morning to find. It was fairly easy to find that trend line off those first two swings. This line right here that's kind of faint probably for you guys, that's where the overnight or where the 315 open. So that's where the overnight begins. So that's your first swing. Even though the highs are up here, this is where the day started. And so that's the reason I use that. Every now and then I might. I mean, I think if you backed up to there, it doesn't change anything really. So, but I generally try to stick to the current day's price action and go with that. It's just much more reliable, and it's not as confusing as trying to find some of the stuff. There may be some trends that last multi days, but there's always everything you need in the current day's price action to find what you need, and that's the way I like to stick to it. It's just less confusing. So, but anyway, let's talk about the trades. Notice this is a two-legged pullback to the trend line. This really confirms these first two swings. This is actually a second entry short counting from here, and this swing is a little bit lower than that swing. Even though we don't break lower, there's a two-legged move up there, then a correction, and then a two-legged move up. So it's two legs, and if you measure that, There's leg one, and then there's leg two. A perfect measured move. And some of you probably went short there. I think it worked, but I'll explain why you got to be careful about going short there. Let's just look. If you went in with a stop at 2109, that would have been a 4-tick failure. If you used a limit order right at the close or a tick back, you probably were okay. But the reason that, people ask me, why did there's a nice setup, and it is a second entry on a smaller level, but that's a first entry counting on this chart. But the real reason is it's not back to the trend line. It's real tempting to enter there. And if you did, hopefully you got out of it. But generally, you're better off to wait for a second entry off this side or off the trend line. And you did get a second entry right here, but notice, let me make this bigger. It's a little bit hard to see. But notice that my signal bar is not very good. It's a doji and it closed up in the higher part of the bar. That's not a good signal bar. And look how close it is to that low right there. And all that's really going on is that prices are headed back to here. So they're not ready to turn down yet. And then you kind of get a double top here and a little failed break higher. So there's a couple of different reasons to enter right there. And you can see that there's a failed break higher and prices turn down, and you get these little bitty bars up here. So you got a real low risk entry, but it's also a second entry on this level. And then if you look at the bigger level, this is just one leg and then a correction and then another leg. So that's on couple of different levels. Sorry, that didn't come out right. Couple of different levels. That's a second entry short. And look at it go once it broke lower. And it tried to go higher there, then pulls back and tries to go higher again. So then what? Now you got a failed second entry long, and it's right off that trend line. If you draw it off the high in that first close, it's right off of it. It's a little close to these lows, so there's some reasons to be thinking, hey, maybe I don't take this one. Maybe I'll wait and see if it pulls back, which it does, and gives you a breakout pullback short. But I like this for a trap. Again, it's a small 2-tick bar, so it's a low-risk stop, and it's a quick, easy scalp, but then it pulls back, and it's a breakout pullback short now, and that's the first break of that trend line. So again, it's close to the lows, but if you measured this, you're looking for a measured move. If you measured this one, you're looking for a measured move. And if you're seeing the two tiers, look how many times we've pushed across. You figure at some point we're going to go the other side, and we bounce off that to almost the perfect tick. And then where does it go? I mean, what do prices do? They swing back and forth, and once they hit the low, they may go a little lower, but then they're headed to the high. And once they get to the high, they're going to try to go lower again. And notice this is all this congestion, and there's a second entry short there, but why don't we take it? It's a little double top, but look at your signal bar. Look at all the overlap. Look how far we moved. We're way away from the EMA. Just be patient and wait on a better setup. And guess what? It fails and goes higher. And it's almost tempting to go long there. And if it wasn't so close to the EMA, I'd say you might even risk a long right there. Because there's high odds that we're going back. But this is a pretty steep downtrend. And this has been, the bias is really strong down until right in here. So you got to be real careful. But I circled it in green because I'm guessing some people are going to get trapped there. And it's real tempting to go short there, but look at all that overlap. This is a really good setup bar, but we don't have a break of this little channel yet. There's no break of that trend line, and so the odds are it may go higher again. And we really kind of had the two measured legs down, and we usually get a correction after that. So if you took that one, the thing was, I mean, this was the other thing about this trade here. It's really risky taking that trade, but it closed and opened so quick and it didn't really back up. You probably didn't get filled on that unless you dropped the limit order and got filled on the way back. But then it's bouncing right off the trend line where you're looking for it to bounce. So it's a little risky. You probably want to wait and see if you get a second entry, and you don't, it makes a new high. So this one right here was a little bit questionable. And if you got in, I would say if you got in with a limit order, but I know you didn't get in one because it closed on its low, opened on its high, and then moved down and didn't never backed up. So I don't think you could get in that one quick enough, even if you had a nice setup bar there. As long as with all those overlapping bars and everything, notice that they're each one making a little bit higher high, but it's still they're pretty much stacked up side by side. So you got to be real careful there, and you really can't take this trade. We did overshoot it here, so that means we'll probably overshoot it down here. That's usually your first clue that you'll get a break of your trend line. But this is a first entry off the low or the high. Turned out to be a good trade. And if you did enter here, you got to realize that there's enough room to get out before you get here. But I just think it's still too risky. If you took it, it worked, but I think you're better off to wait. And and then it does, it breaks, and then notice you got little one leg up, pull back, second leg up. So there's a little two-legged correction. It was tempting to go short there, but again, you don't have a new high yet. It's a doji. That's definitely a doji. It closed right in the middle. It's not a very good setup bar. There's not much room to that low and that low. So again, this is just a little trading range. So just sit tight and see what happens. And then it breaks and goes higher again. And this is almost this pattern right here is almost a repeat pattern of this. You just kind of got a little range and it breaks. It doesn't really break lower here like it does there, but it looks very similar. And then it shoots up and then it turns back down. And this one was kind of iffy. Um, you got a little setup bar there, and it's a failed second entry long, so you may have considered entering there, but guess what? This bar broke higher first and didn't, so it never triggered. So then you got a couple of them stacking up, so that makes this one kind of questionable. If you did enter on a break below this one, I would say you have to use a limit order, and it would have got filled all the way back up to here at least, and then it turns down. So I liked entering there, because now you got a second entry off the high. But if you entered here, it would have worked. There's reasons to consider entering there if you use a limit order, maybe. And also, notice this is one. There's two swings here, but that's one leg up, a correction, and then you get another measured leg up. So this is just two legs up, and you got several attempts to go higher that fail, and off it finally goes to the low side. There's actually a failed second entry long there, but again, you got too much support right there. I don't have the line there. Let me draw it. I just think it's too risky entering right there. And you can see that there's a double bottom. So your bounce, let me put this back. You're just kind of bouncing off of it. There's no long there, but there's no short really either. You almost get a breakout pullback short, but notice it doesn't act as resistance down here till here, and you don't want to go short right there. So, and then it bounces, of course, and you get your first entry short, pull back, it looks like it's going to go higher, and then you get your second entry short right there. So I like that one because you got that long trap, and it really started to look good right here, but notice how it closed above the EMA, and you got a little bit of stem. You don't want to go short there, even though that's a second entry. That's not a good one. And notice there's no break of the trend. And then you got your close outside here, and then a little attempt to go higher, and then another little attempt to go higher, and then it turns. So it's like a little double test rule there. It's a real micro, but look at it go now. And then this is a breakout pullback short. It's also a failed second. Look at the new high pullback first entry, pullback second entry, and it really doesn't break higher right there, but it's just like it's basically the same thing, but it's right off that trend line too. This trend line's really, somehow I moved it here. I always grab no matter what you try to grab, you always grab the wrong one. And so that trend line's coming right off there. It may be just a little steeper. Sometimes if you blow your chart up, you can see these better. It might look like it's touching on your bigger chart. So a lot of times I like to blow them up like this and really work in, and that helps you to find some of this stuff too. But this is a breakout pullback short. Um, and you're looking for this measured move right here. You can see we went a lot further than that. And I would also be looking for this one. And the bigger one that I showed you up here compared to here earlier. So there's several different ways you find your targets from all the way down there. So we're still working down. And again, it was tempting to go short here. And it would have worked, but I think it's too risky. Look at all the overlap. You do get a reversal bar right off that. Notice this, you got one leg up, a little correction, a second leg up. So if you went to a smaller chart, there's indeed a second entry short right there. And let me talk about that real quick, because people will send me an email and say, what other chart do you look at? I don't look at any other chart. You got to learn to see this on this chart. If you look at multiple charts, in my opinion, they distract you and you'll miss trades and you'll get confused. But let me show you, there's a new low and it's trading up. Then this bar trades down and then this bar trades up. And so when it goes lower there, that's like a second entry. And if you went to a smaller chart, you would indeed see two legs up and a second entry right there. I still don't like it because it's so far away from the EMA, and we've got this break here and a couple of legs to a new low. You can see that we're actually right at the new low right there. I mean, it's over here, but if you pull it over, that's what you were looking for a target. So, and all it does, it pushes a little lower and it traps people and reverses and then traps them to the long side. Then they try to take it down. And notice you got a new trend working down here on a smaller level. That's your first break. So what's probably going to happen? Prices are going to try to push down, and you get two legs down to a new low, and then it reverses. Exactly what you would expect to happen. And look at that big reversal bar. Notice that low, pull back first entry, pull back second entry, and this is actually the low from yesterday. We shot right through it, pulled back and tested it. And this is actually a failed second entry long. I probably wouldn't have taken this short otherwise. Notice this low, first entry, pull back, second entry, and it turns down. Otherwise, I don't think you'd probably want to take that trade. You are looking for a new low, but there's many times that, there's some support right across there. So many times you got to be leery of those. And that's what these people were probably buying this on, the hopes that that's going to be support and it's going to go higher because it looks like we're trying to reverse again. But they'll try to fool you. And then you shoot down for a new low. We already talked about both of these, why if you really want to be aggressive, I'm more open to this one here, making it green, simply because we've got our break of this and a new low. There's actually two legs down to a new low. We don't have a break here, but we are way away from the EMA there. Excuse me, I'm sorry, my throat's bothering me a little bit today. My daughter has been sick with the flu, and I'm hoping and praying that I don't come down with it. But anyway, don't feel bad. My throat's just a little scratchy, so let's hope it's not the start of the flu. But anyway, if you want, I can see an aggressive reason to buy that one. It's not a perfect close on its high like you would like, but notice how big that stem. I mean, it takes a lot of doings to be that bearish and then reverse and close way up here almost on its high. You could use a limit order and it would have filled you back a couple of ticks. And look at it go. And then you get the pullback here. Again, there's a lot of overlap, some dojis, but it is right off that trend line. You can see So there's some reasons to consider that one. Um, and if you took it, it worked. But again, I think it's just a little bit risky. It's not a perfect setup. Um, there's resistance all the way across there. So it's kind of like a breakout pullback long for that little double top as well. But it's still risky. And then you get a two-legged pullback here and a second entry long right there. That's the first break of that. And this is your failed second entry short. Notice the new low, first entry pullback, second entry. So I like that one. And where does it go? It runs right up to a new high and then it backs up. And then you get a little short trap there. So another chance to go long. Um, and a lot of times you do get two legs up to a new high. And you measure this first leg. Move it over for your second one. So you want prices, you're looking for prices to go at least there, and they go a good bit higher on that one. None of the measured moves were a few of them were right on the money, but none of them were right on the money. Most of them weren't right on the money today, and most of them went further than you would expect. So, but that's always a good thing. You'd much rather them go further than not go as far, and you get fooled and hang on too long. So, but that's what I saw today. Fairly easy day. It was all downhill. Notice how everything's, the EMA is all downhill. We had the little break here. The EMA is all downhill. Everything's pretty much below it. Where do all the trades set up? Either off the trend line or during the pullbacks to the EMAs. And it did the same thing on the way once we went back through. And that's your clue here. Look how it went straight on through there, pulls back and tests it, and then goes high. That's another reason to like that trade. But look what happens once it gets above it. Every time it pulls back to the EMA, it tries to go higher. And that's why we use the EMA. It's kind of a measuring gauge. It's kind of the line in the sand, but that's where most of your reversals will occur. Either the trend line or pulling back to the EMA. So, and I'll get people to send me their chart and they'll ask questions, and they're asking, how do you know when this is over, move up? Well, and they won't have their shorter term trend lines on there. And, it takes a little bit of skill and experience and practice to draw these and get them right. But once you get them, there's so much information they give you. Just like this little one coming down, you get the break, two legs to a new low, it reverses. You get the break, it tries to go higher, but the downtrend is just too strong and it turns down again. But at least you know that you don't want to sell here until you get a break and a retempt test attempt. So it's very helpful, even if it doesn't follow the rules 100%. It tries. It's just the bigger pattern or the bigger picture is too powerful. So the down bias was too strong for it to make a new high there. And notice that is the open from yesterday. If you come across here, well, my charts are not showing. My chart, I lost my chart earlier and I had to reload it. So I only loaded a couple of days of data when I redid this. So, but anyway, that was the open from yesterday. And notice how it acted as support and resistance. That's why I put these lines on there. The red one was the low of yesterday, and look how it came back and tested it. And the green one was the high yesterday, and that turned out to be the high. We never got anywhere near that. Well, near that today. So, and I will usually put my current day. Let's just put it on there and look at it real quick, and then we're going to wrap this up. But I will usually keep both of these on my chart, and I like to keep the line straight, so I plot the current value only. I don't want the lines all jagged. I just want to know where the high and low were. And you can see that was today's high, the darker green one. And look, that's where we started the trend line. And then today's open was at the same place, and then today's low was right here. And these broader lines will be thinner tomorrow and still be there in the same places, but they'll turn to thin lines, and then we'll use today's data for the thicker lines. So that stuff is important. And so once those areas, I like to keep those areas on my chart, the previous day's high, low, and close, and open. The black lines are the open. So that was the open for today. And I don't know where the open for yesterday was. But anyway, that's what those lines represent. So, and they're important. And I like a lot of times I'll take them off when I'm doing the chart lesson because they get they kind of start to make the chart look real busy and make it hard for people to see things. But when I'm trading, I have them on there. So hope that makes sense as to why I do. But I'm gonna wrap it up. This is Mack with PriceActionTradingSystem.com, and we'll see you next time.